Hello, everybody. Welcome in. This is our third episode of Technical Analysis. I'm joined today by my good buddy DIXON PIPER. How you doing?
How you doing, man? Doing all right.
Doing fantastic. Good to hear. I've actually been pretty excited to sit down with you and get your take on the kind of the market psychology and the sentiment of what the markets have been up to lately. I generally think that during the bear market, you were one of the most based approaches to the market, and you stayed unbiased as much as you could, and that really showed in a lot of the analysis that you put out. And now I think the tides are turning, and I think that you're starting to stay unbiased, but also realize the reality of the situation. And so, like, can't wait to get into this and just
We can be bullish now.
yeah, just to know more about there. You said a few words on a tweet the other day. It was maybe going back about 3 weeks where you said. Maybe it was like 4 weeks ago, you said max pain to the upside, and that it totally encapsulated the way that I felt about the market without knowing the words to say. And ever
hmm
since then, I've been reminding people. I think the way I was framing it was I have max fear to the upside. Like max to me, I was terrified of the upside move on Hex, particularly because of a function of the low liquidity and just because it was so nastily oversold. And I
hmm
knew that once these big bags started to empty out, that the type of rally you would see would be it would kind of set the tone for what the bull market to come was going to be like. So, you know, I guess I want to talk about, I want to talk about a lot of things, but just generally to start, why don't we talk about like general market sentiment, and I'll bring up like the Bitcoin Fear and Greed Index, and we can just kind of go over our thoughts and feelings on that.
Yep.
Go ahead. Let them rip.
Are you putting it on the screen or are we just talking about it? Oh, it is coming up. Okay.
On the fly,
I,
baby.
what's it at? Neutral right now.
We're at
So
like neutral right now, yeah.
I don't really know what how useful it is to the upside, just because like part of the metric for the fear and greed index is the price actually going up.
Mhm.
And we can stay overbought on like indicators like the RSI and all that crap for a long time. But when the fear and greed index is like 7, 8, 9, like historically low, like there's really never been a bad time to buy crypto. And like that's where like basically like I was pretty certain the bottom was in like 10 days after the FTX collapse, because I was talking to another person I talked to a bunch in this community a little bit, and
Yeah, don't be
we were,
doxing people now.
yeah,
Don't be doxing
we
your
were
sources.
talking, and basically like he was bullish right after it happened. I was like, if we're gonna get capitulation, it's going to be from this FTX collapse. Like that's just it. And I said, like the day the FTX collapse happened, I think we were down like 20% in the next couple days or so, 22% in Bitcoin and ETH.
Yeah.
And I told him, I'm like, I want to wait like 10 more days, because if we're going to have capitulation, we're going to have continuation on this within 5 to 10 days. Like we're going to, we don't rebound during the middle of a capitulation.
Mhm.
So I waited like 10 days, and then like right around November 20th, like literally the day of the bottom, I was pretty bullish. And the thing that solidified it for me, and I don't like blasting people online and stuff, but some people just suck so bad that you kind of have to sometimes. But like you see like Alexander Lorenzo telling people like on the day of the bottom, short the market, you can make all your money back. You need to sell all your DCAs. He said this shit on the day of the bottom. And you got like Wendio there. She makes a video saying that she's selling her HODL moon bags the day of the bottom. Like all this stuff's happening the day of the bottom. Like to me, it wasn't technical analysis. It
Yeah.
was just there when everybody's that short, and when everybody on earth
Yeah.
sold right there, when everybody's sold waiting to buy that 10K, it's
Yeah.
not coming, bro. Like it is
Yeah.
not coming. This whole run to the upside could
Yeah.
just be fueled by liquidations for months. So I don't know. I think where we're at now, I think we're going to make a lower high. I think ETH could probably find support around like 1300 and make a lower high and be bullish still. And liquidate more people going up because people are still going to be shorting this. I really do believe this is the disbelief phase.
I'm in the same camp, and I'm looking at like some of these, like how I'm looking at how strong Ethereum has held up this year, just in general. I'm sorry, in
Mm-hmm.
2022, and I'm amazed by that, first of all. And so like even just on the sell-off here, it just doesn't have the same like strength that these sell-offs in the past had. And obviously, like when you get like a huge fundamental event where $8 billion goes missing and there's a bankruptcy that follows, obviously that's when you see these big reds occur. Well, we're just dropping right now because the market still thinks that they're still in the same mindset they were back here. But
Yep.
smart money's not in that mindset anymore. Smart money is
Mm-hmm.
sitting here like licking their chops, drooling at the mouth, watching this thing fall because like as soon as you get the big enough guy to come in to absorb, it's just going to get ran right back up. That's
Yep.
just where we're at in the cycle. Um,
And if I had to guess, I haven't looked, I haven't done any research right now, but I'm sure the shorts are just piling on at the moment.
yeah,
And I don't think I like the time to short was the previous year and a half, not now, you know?
let's
Like if
uh,
anything,
let's dig into
like
that. I'm going to try to pull up the shorts in a second. I remember back here at the bottom in November, the shorts outweighed the longs 9-1.
yeah.
So
And
that to
if you
me
look
was all I
online,
needed to know. Yeah,
right. And like it's almost a given we're going up when here's the thing, retail does not win. That's not how this shit works. Like I haven't heard anybody in the last year and a half like say the phrase markets can remain irrational longer than you can remain solvent. I don't hear anybody saying that anymore. And that's one of the most important things you have to remember about these markets is earnings can come in for Apple and be dog shit, but still Apple will go up 4% that day. Why? Because there's somebody with more money than you that's going to buy it and wreck you. And that's just
mm,
how these markets work. These markets are PvP. They're
100%.
they are not driven off of earnings like they could have or should have been in the
They
past.
if
They
they
aren't
let's put it this way,
fundamentals of companies.
if they're ever going to come back to a point where they're driven by real
Mhm.
PE ratios and real base valuations, it's not going to come until after a massive system-wide collapse. And we're just not at that level right now. And I think that a lot of that is a function of all of the money that was printed in 2020 and that was absorbed by the private sector
Yep.
during that time frame, and it's just now sitting in their coffers. We're talking like an increase in money supply from 10 trillion to 22 trillion dollars. That's like to try to put trillion into your mind is like almost impossible just as an
Hmm.
individual. And so I think there's enough cash there that can absorb these risk assets and just they can play this whole other abstracted layer of a game now with all of that extra cash that was actually printed. And so it's
Hmm.
gone way beyond base valuations, and we're just like as you mentioned in the green room about the real estate market, housing prices aren't coming down the way they should be. You're just not seeing the real signs of like a real recession here quite yet.
Right. And the thing is, like, a lot of this information that the government's putting out is just not good information. Like, yeah, the housing prices are coming down in some areas, but a lot of the places where they're coming down a lot are shit areas, you know? Oh,
Mhm.
housing prices are coming down in some spots of California. That's because there people are actually leaving there. You know, people don't want to go there anymore. Like rural areas, Wisconsin areas, Wisconsin, like real estate everywhere I've seen in Wisconsin, really strong. Even like lakefront vacation properties are really strong in Wisconsin still. Uh, Stuff like that, where people, I mean, uh, you're probably familiar with the Midwest a little bit. Like
Mhm.
lakefront properties in Wisconsin almost doubled in 2020,
Mhm.
and they really haven't come down almost at all. You know,
So I
the
think a lot of
first.
that faulty data, just to get into that point real quick, was
Mhm.
this is called shadowstats.com, and it actually shows you what the adjusted rate would be based on the 1980s method of measuring it in blue versus the current CPI rating in red. So like
Mhm.
the way that they've taken when I say they, the people that produces these reports and this data, they changed the input variables so that over time, instead of you getting the actual inflation rate curve, you're
Mhm.
getting an adjusted one that they want you to see. So it's all just smoke and mirrors. It's not actually real valuations anymore. It's been running off of falsified data for so long. And because this is a scheme that's been going on since the 80s and before that, basically when we left the gold standard, the fiat money system started to take a artificial trajectory up, and what that did was it created a huge opportunity for the economy to grow at an alarming rate, which has had all these other downstream effects. But ultimately, what it does is it gets you so far away from base valuations and so deep into money printing that you just have this scenario now where there's almost no way to extract all of that capital, all that free floating dollar capital out of the world economy in such a short time frame. And I think that's kind of a function of why you're not getting that recession element right now.
Yeah, I think like the biggest thing is like I just think this probably sounds a little bit insensitive, but I think people are so stupid that they don't understand how much like middle class people. I think a lot of people are just not smart enough to understand how detrimental 8, 9, 10% interest rates are to their lives. Like I have some people pretty close to me that went and looked to buy a house right now, and like I know what they're making, and I'm like, bro, I don't need to look at any papers or run any numbers to know you can't afford that. Um, there's just a lot like the repossessions on cars or people defaulting on car payments. It's at a high right now, and the thing is, I think I saw that used car prices are going back up at the moment. The
Hmm.
fact that interest rates are like this and we're not getting the recession yet is like really surprising to me. I thought the recession was coming like last August, September, October. So like I'm way off on when I thought it was coming, and I think I just don't take into account like how long people will go before they actually realize they're in trouble.
Yep.
You got like credit card debt is at a high, but the thing is like credit card debt's always at a high. It's always making a new all-time high in credit card debt. So like that's not the greatest thing. People's savings is at an all-time low, but I really don't know what the bubble break is that makes the recession start. But like to me, if you look at the news, like they say that 80% of Americans believe the recession's already here. Like I don't think it is. I I could get anybody employed within a 50-mile radius of my town. Like there
Mm.
is jobs everywhere.
Yeah.
You know, I
Mhm.
could get people good paying jobs anywhere. That doesn't sound like a recession. Um, there's just a I tried to put a pool in last year. I called 5 pool companies. Every single one of them's 2 years out. Like,
Mhm.
why is every pool company 2 years booked in the middle of a recession? Like, I don't know about that. There's just a lot of things that I see that like the recession's just not here. But it's to me, it has to come from these interest rates going up. It has to come.
Yeah.
And
This is a good
uh,
point. This is probably a really good time. That's really good that you can bring that perspective to the people about ultimately that the signs are in your daily life right now that this is not typical recessionary type economic
mhm,
situation for people. That's great. And so then
it-
now what we can do is take it a step further, and just dig into this like Fed funds rate chart versus the S&P to try to use the data to predict, if there is gonna be a moment where the markets crash and you get a more of a recession, like what kind of outcome would that be?
mhm. Um, I think from right here, I could honestly see the stock market, especially like the Dow, going up and making a double top, and then having the real crash. Like like in individual stocks, especially in tech stocks that were super inflated, they
Mhm.
went down a lot. But actual sound companies that have profit and stuff,
Mhm.
like
They did
the
better.
Dow is down like 8%, maybe. I don't know. It's not down very much.
The Dow looks really good. It's in a neutral pattern right now. And
Right.
it's actually doing that above support, above the global downtrend that we had all of last
Mhm.
year. And so this is not a joke. Like this is like
No, I
your real economy, not your tech stocks that are so heavy into debt and overpaying. That whole industry in Silicon Valley was super inflated. That might be where where they're getting deflated and exhausted, and they're getting replaced by the efficiencies in the technology sector that are eliminating a need for jobs. But in the real industry, then the real growth stock, like the real growth stocks of the future, is real industry, right?
mhm,
And that's the Dow, right? That are producing goods and services for the economy. That is showing strength, like unbelievable strength right now. And I
mhm,
think that's a function of that that the amount of demand that's there is being paid for by all those dollars that was printed by the increase in
Yep.
money flows.
And people sat through a year and a half now of the market going down. There's a lot of cash on the sidelines waiting to go
Mhm.
risk on. And I think people are just there's just a lot of pent up demand to go risk on right now, you know? I think like I really don't know the stock market that well because it can be so irrational. But I mean, I think the most likely scenario right now is like, especially sound companies, like especially like in the Dow. I think the Dow probably makes very close to a double top, and I think the most realistic thing is we probably get like a crash very similar to the COVID crash, like right around when they're backing off the rate raising,
Mhm.
right
Yeah,
when
we
the
can pull that
like
up.
the real recession actually starts. I think we could get one of those like month to 2 month really bad nuked months like we
Yeah.
did during COVID.
Yeah, I do too. And to support that, we'll dig into the chart now. So here I have for you guys in orange the federal funds rate, which is the cost of money. So when you go to your bank to borrow money, this orange line determines how much of an interest rate you're paying per month to borrow that
Hmm.
money. In pink, you have the S&P 500, which is just a general index which measures some of the top 500 stocks in the stock market. Okay. So we just using that as a base metric to try to figure out, well, when the Fed funds rate, when the cost of money changes, how does that affect the stock market as a proxy to potentially how is that going to affect cryptocurrency? How is that going to affect housing and yada, yada, yada. So as you can see here, I have outlined for you guys every time that the rates pause and flip back the other way, that's when you see the sharpest declines in the stock market. So like right here, you got a decrease in rates and then a sharp decline. You had a crash in the stock market. Here you had a complete inversion, pivot on rates, crash in the stock market. Right here, complete turnover and pivot on rates, crash on the stock market. Pivot on rates, crash in the stock market. And then here you have January of this is 2019. It was a little bit of a different situation where they pivoted on rates, and you got the crash slightly later. It was a boost up and then a shoot down
Hmm.
under maybe some different circumstances. So ultimately, when I look at this chart, what I'm looking for when I watch like what I think the markets are going to do moving forward is I'm looking for a change in the angle of the increases of the Fed's increase of interest rates. And so right now
Hmm.
you can see here that we're seeing a change in the angle right now. So they've gone from raising 0.75 basis points to I don't know if they even did zero point 0.5. Now all of a sudden they're doing 0.25 basis point raises. So they're already starting to slow rate increases. And so what this is it's an indicator for when you see this pause, that is your indicator that you want to start to get short again because when they lower rates, and usually it happens quickly, smart money, let's say they don't pivot on rates this year. Let's say they slowly pivot and then maybe next year they start to drop them rapidly. Well, then
Hmm.
that's going to give the stock market time to do come up here. And this is where DIXON came in and said he thinks potentially, if you want to explain like what you were saying what could happen in the
I just
stock
think it's
market.
going to double top for I mean, there's several different reasons. Just because one, the having a kind of a brain fart here. Go back
Well,
and say what you were saying.
just think about this. Like think about this. You were telling me that you think that the S&P can have a double top here on
Hmm.
and it would coincide at the end of the year or early next year with a pivot on rates. And what you're saying
Yeah.
is a change in the angle here. So, I mean, I'm thinking that, that they're going to slow their rate increases, which is going to start to squeeze and put the people that are so far in debt and they are at their debt limits and credit limits and stuff, it's going to start to squeeze them more and more and more. And as the middle class gets squeezed, something in the economy is going to break and then they're going to be forced to pivot even
Hmm.
if it's the debt ceiling in June or whatever ends up being where they need to print again, they're going to shoot these back down, and that's when you're going to look for that big crash in the markets.
Yeah.
Um,
This comment in the chat, I was reading it. That's why I was not thinking, but I've had the same sentiment that this guy was kind of saying. He said, since everyone expects a dump after the after pause on rates, we might expect something different. And like that's kind of what I was thinking myself. Was like, man, I really like it's just a guess for me knowing where the stock market's going to go
yeah,
because I could see it being different this time. You know,
yeah, yeah,
everybody's pricing shit in way further than they did before. Like another thing is
Well, how
one
about this
thing.
period here, where you had a decrease in rates, but it wasn't a direct decline
What
like
year is
that?
that?
So this is in 1995, and look at what the
Right.
stock market did during this period.
Yeah,
So
I'm not really
this is
familiar with 1995 then, so I don't really know.
well, so let's just say that we had a sharp increase in rates from 2.9% to 6%. So that's like a
Mhm.
doubling in rates. Right now we've actually done like a 4x or a 5x in rate increases. So it's kind of not the same in that way.
So to me, there's a huge difference between that though, because 6% interest, borrowing 6% on housing, farm ground, cars, and everything back in 1995 is way, way different than borrowing 6% on shit now. I'm just going to use farm ground for example because that's what I
Mhm,
know a lot about.
mhm.
Like in 1995, the average farm ground was only $4,000 an acre. 4,000. Now it is 20,000. So you could pay 6% interest on 4,000 back then. 20, is that 30 years ago now? Almost
So
30
that
years ago.
makes those ratios are so imbalanced. It's saying that we've actually overshot that target on rate hikes already.
Yeah, like
Be-
six
When
percent
you adjust
interest.
for the price.
People are going to say, well, we did just fine on 18% interest back in the 80s and stuff. Yeah, but that's when I'm going to go back and use farm grounds because what I'm familiar with. Farm
Mhm.
ground was $800 back then, and you could sell the grain. The grain has not gone up in comparison with the land values. Land
Gotcha.
values since 1985 have gone up 10x. Okay.
Mhm.
The grain has not gone up 10x. The grain has only gone up 2x.
Mm,
So interest rates could be afforded back then to buy land. You cannot buy land with borrowed money right now. Like you
mm,
can't do it. You can't go to the, you can do it, but it would be the dumbest investment of your life to go buy farmland on 9% interest. It really would.
mhm.
It just like the rent you would receive off that land would only pay for not even half of the interest, let alone the principal. It wouldn't even pay for half of the interest. So
Yeah.
why would you be buying land? The same thing applies to the housing market and everything. Like the when this interest gets high, you cannot pay those prices for houses. It's one thing when the interest rates were 2%, like people were borrowing money at 2.5% to buy houses. It's one thing to pay over market value 20 grand for a house. If you're like 2.5% money is free money, basically. It really is.
Mhm.
You can do a lot. Like anytime the interest rate is under the inflation rate, it's free money. It honestly is because you could put that into anything
Well, this
that's
is a
not
good
like,
point. This is a really good time to talk about like what the land is producing you, because that was really enlightening to me how you said that land valuations have gone up by a factor of 10,
mhm.
and commodity prices have only gone up by a factor of 2 in in the term of grains. Like look in beef, like this is since the COVID crash. Beef
Mhm.
is near all-time highs. Like it's approaching all-time highs. So
Mhm.
like, but then you have, let's see, what's other stuff like corn near all-time highs, wheat, just came off a high.
Is
And so
that
like these
spot though? Future? That is futures. Okay.
futures,
Yeah.
yeah, spots got you at, kind of consolidating. Futures has
Mhm.
got you, trying to build support. Like, and I think this is all these commodities being at such high prices is a function of the PEs on land, borrowing for land and stuff doesn't make sense in the same way that the valuations of everything else in the markets kind of got screwed up by all this
Right.
free
And
money
and here's
printing.
another thing. Like for farmland right now, um, so right now on average, an acre is worth 20 grand for
Hmm.
farmland.
Hmm.
And futures prices for next year, let's just call it $6. I think the futures price is going to go down. That's my speculation. Is it's going to go down without Ukraine getting nuked. I don't think it's going to go up to the prices it was last year. Like it topped out on this CBOE, like maybe like 750 or something
What
on
chart are we
there.
looking at?
Just corn or soybeans, whatever.
Any
But
of them? Yeah. Okay.
it topped last year in like May or so.
Yeah. This here is the
And
top, and it says June 6th.
okay, June 6th. Yep. I don't see any way we go past that
Yeah.
without like Ukraine getting bombed. And if we do go past that, uh, for one, like that's going to raise inflation. I think
Yep.
oil has bottomed. I think oil's bottomed.
Oil's bottomed. Yep,
Um,
I agree with that.
it's just a weird time. I think oil's bottomed. I think
This is
commodities are going to
important.
go down unless there's some world event. Like I've been selling commodities for 20 years and I have no idea which way it's going ever. Like it, that's why like I've been so big on dollar cost averaging, especially
Yep.
in crypto, is because that's what after I mean I've lost plenty of money in the commodities markets in my life, and the most success I ever had in it has been dollar cost averaging for the last decade. Like
Yeah.
I always beat the fall price like the last 8 out of 10 years, dollar cost averaging, because I can never figure out where corn prices are going. You know, last
Yeah.
year I did really good because just because of the world events going on, but how often is there countries getting attacked and going to war that produce a lot of corn and stuff? You know what I mean? So
Gotcha.
it's like it's really hard to say. But what I was gonna say was like even for real estate in general, just like let's use farmland as an investment where a bunch of money is going into right now. Uh, the returns on it, if you're a cash buyer, the returns on farmland right now is about 1.5%. That sucks. You could go buy a T note or something and make
Yeah.
more than that right now, you know? So
Yep.
why would you buy the farmland? Uh, and the thing is, I think the corn prices are going to go down. So rent is going to go down.
It
And
looks like a
it's
Head
just,
and Shoulders on on the technical level on corn.
mhm.
So yeah, I agree with you. I mean, would you say
my,
that
my,
by your
my
gut
bet's
feel
it's
is that
going down. Like I'm starting to sell
is your
futures
gut
right
feeling that that the demand is the same or dropping for like commodities, food prices and stuff?
now. Like at the store
Yes.
or
And just
I
demand
have no idea,
from the
man. Like
consumer.
I don't know what's going on with this whole egg thing. I haven't looked into it for a
Well,
second.
this is interesting because check this out. The egg prices is actually absolutely ballooned.
Mhm.
So there's a lot of narratives behind the whys.
Is
And
that from like an event that happened or what? Like I haven't
I
followed
mean
it at all.
there one of the narratives is that there's some chicken disease. I tend to think it's a little more nefarious than that.
Hmm.
Just with all of like the plants being burned up over the last 3 years and all of the centralization of farmland and centralization of production facilities, but without getting too far deep in the woods on that, the proof is in the pudding that there's shortages of all these things coming, or there's
Hmm.
whether they're planned or not planned. And look, you got an all time high on egg prices right now, and so I just I look at these things and I think that the pain is actually going to come from the consumer's ability to purchase, which should lower demand.
Hmm.
And then that lowering of demand should bring corn price and other things down with it.
Yes,
And then because they're just not going to be able to afford it, and so people are
I
going to have
agree
to
with that.
readjust basically it's the Fed is putting the boot on the neck of the economy, saying you guys aren't able to afford this anymore. You have to change your behaviors. It's their way of controlling people's behaviors, spending behaviors specifically.
A recession should bring fuel prices down. A recession should bring commodity prices down. It should actually deflate everything. Like that's how the inflation should get fixed is a really, really deep recession. You know, it's just,
Mhm.
I thought we were going to get the recession last winter and like, it's still not here, you know? Um,
Yeah.
so
So
I can't,
since we're here talking crypto, we'll move on from all this because I think it's good that everyone gets a perspective on what's
yeah.
going into, with the Fed, how interest rates move markets, with what the markets are doing currently, with how much money was printed. So again, I'm going to show you the this is the one other thing I wanted to show you guys was how much money was printed in 2020, and like look at how far away that is from the mean. The mean being this channel. Like this
Hmm.
is just an insane amount of money that was printed. So like there is this money is still sitting in the coffers of both the private and the public sectors, but to weed this all out of the system, it would take 30 years, man. It would take 30 years. And so I think, you're just going to have to deal with higher prices amongst everything. That means that in order for the economy to function at a sustainable rate, wages are going to have to increase to meet the demand of the consumer to make
Here's
sure
another
that
thing here's
uh-huh.
another thing that's a problem that I don't think gets talked about it too much is like when the way the government like calculates their inflation rate, they go off of the last year. Well, when June was a treacherous year for inflation last year, or a month, June was a treacherous month for inflation last year. Like, yeah, it doesn't take a whole lot to not like to be under that, you know? So like of course inflation's coming down, but we're never going all the way back to the prices we had 2 years ago. Like we are not.
I agree.
Equipment
I just
prices,
don't think it's possible.
Nope.
They just don't.
Equipment
There's more and more people
prices,
every
like
day, and there's just less and less
wages. I
producing.
don't see wages going back to where they were. I see just everything's inflated. And what it's doing is it's creating a bigger gap between the middle class and the rich. I mean,
Yes,
that's what it
100%.
does.
Yep.
Like
So this is just like
inflation
a
makes rich
central.
people richer and
bo-
poor people poorer.
It's a boom bust cycle that let me see if I can just pull up the boom bust cycle so you guys can see it. It's how the rich get richer and the poor get poorer. It's just a simple expansionary phase, and then there's a contractionary phase. And
Mhm.
this is the basically the 45 up and to the right forever of it's a function of how money is printed basically because we're
Yep.
measuring everything in US dollars, which gets printed forever. And so it's in a game to acquire the most wealth in the term of how many dollars can you receive for the
You need to
assets you own.
own the most things that are going to go up in value. And like usually things that aren't housing go up more, you know? Like it's nice to own one house to live in, but I don't personally call a house an investment. I think of a house as a liability to me
Me too.
because
Yep.
it's very difficult to make much money on a house by owning one. So
The only thing
I
that it
personally
does,
don't like them.
I mean, the good part of owning a home is that your like your person is safe. Like your body
It's a
is gonna,
need. It's a need.
it's a need, yep. But it's
I
not.
don't see
It's
it as an investment. I see it as a need.
like think of it like this: if you have as long as you have a roof over your head, you can get up and be productive in life. That's the best way
Mhm.
to look at it. So, but that if you don't invest in that for yourself, whether it be a home, a rental, or whatever it is, you just need to have that you're like secure, surviving, secure needs met first.
Right.
Then you can go into the economy and you can start to accumulate in the economy. But if you don't have those basics figured out, then you're in trouble.
Yep. I mean, to
It's
me,
definitely not
like,
going to make you rich just owning one home.
yeah, to me, like, as uncertain as I am on where commodities are going, where the stock market's going, like all this stuff, like when the recession's coming, I do feel very, very confident that the crypto bottom's in. Like, I think the chance of ETH going under the $750 low is in the single digit percentage.
Yeah,
I
dude, look at
think that
this.
I think the chances of ETH going under 1,000 is less than 20% personally. And I think the hex bottom, because that's what everybody in here wants to hear, like I think the hex bottom is for certain in
Mhm.
personally.
Yeah,
Like
we'll definitely get into
I have
that for
full
sure.
conviction the hex bottom's in.
I am too. And I've been saying that since we broke out, even
And
before
I
we
was the
broke out.
biggest bear last year, man. I was the biggest bear from
You were.
February when I started streaming and stuff. I
When we
kept
first
saying
saw
for
you come
12
on the
months.
Twitter stage, I was a little bit like this asshole. Why you gotta be pulling my price down? But it's not your fault, bro. It's just the way the market was.
There's a difference between what I want to happen and what's going to
Exactly.
happen, you know?
100%. And that's what I always loved about your analysis is that it was unbiased. Hans Hex is also the same.
Mhm.
He's like very unbiased, very technical. And I mean, you guys are seeing your own perspectives like from your daily lives so that you have so much to offer. And that's what I just wanted to say, on behalf of the
Cool.
community, thank you for that. And we appreciate having you around. So if you want to keep doing that, that'd be great.
Yeah, I'll
Um,
be bobbing around a little bit. Um,
the this shit here, man, on ETH on the 4 hour, like this bottom, like it tested it on an angle. Like this, you never got new lows on, even though Bitcoin went to new lows, ETH never made new lows.
yep.
So I just think ETH is just such a strong competitor in the space right now and almost like a need because it's
Hmm.
really the only thing doing
Yeah.
serving that niche, right? Because everything else is more speculative.
So like I've been basically, I mean, like long term, I've always been bullish on Ethereum, especially versus Bitcoin. I've always been more bullish on Ethereum.
We'll bring that up.
Uh, I loaded up a heavier bag of Ethereum at the bottom than I did Hex even, and now like seeing this, I'm in a little bit of a disbelief here because like the fee problem where 1 week into this first rally we ever had off of a bottom, we have $100 Uniswap transactions. Like that ain't cool, man. You know,
Right now I'm seeing
um,
19.8 Gwei.
I'm having a real hard time comprehending how the hell Ethereum is going to go to like to make it worth holding versus other crypto. You want it to
Yeah.
10x or something, you know? Like respect. Like if you're holding crypto, you're here for at least a 10x. You know what I'm saying? Like
Yep.
if it goes up 2x, yeah, it's a good investment. But we're here for like mad gains. And as much as I like Ethereum, just because like the main reason I like Ethereum is the safety of it. Like it's not going to
Yep.
crash.
Well,
It
it's like the
has
oil, right? It's like the oil of the cryptocurrency space. Like it's a
right.
need that you have to have in order to run around and do things. Which so even if your exposure to ETH only gets you a 2x or a 4x, it's actually better if it does that because then you can leverage ETH in Hex and other coins to get the returns you're seeking, but also
Mhm.
maintaining a bag that's a safety net in the utility token, which is Ethereum. This
Yeah,
also gives opportunity to things like PulseChain and other layer ones that are going to come out to really shine and try to improve on a lot of Ethereum's weaknesses and gives them a one up, you know?
right. Like if everybody in here is a Hexagon in the chat and everything, so like I'll say, like I'm honestly more bullish on Pulse Chain now than I ever really was. Like I don't really use the test net. I don't really do anything on chain and stuff. I just don't. I'm not very active in crypto, surprisingly. But like in this last month, the Ethereum fees went crazy. Like last in 2019, during the start of the bull market, like we were still pretty slow. Like during at the start of Hex, we were doing the adoption amplifier for 25 cents a transaction. We were making Uniswap transactions for 25 cents. And now, starting a bull market or whatever, a ranging sideways market, the crab market for a year, we're gonna have $100 fees to start that. Like that ain't cool. And so it's like, okay, we can go to Arbitrum. That's one solution. I haven't done a ton of research on Arbitrum, but basically, to my understanding, like it's all basically secured at the end of the day by a multisig. I don't know how much money. Like, I think like some coins like GMX and stuff are gonna do really good on Arbitrum, but like how much of my net worth do I want to have in something that's secured by a multisig? Like one of the main things that turned me on to Hex at the start was all the audits and the fact that Richard wasn't going to put out bad code. And that's why like from 2018 to 22, like the only thing I ever held was Ethereum and Hex, because I knew that I'm holding two things that at least I'm not going to lose my money from something stupid like rugs. Like I'm not going to get rug pulled. I'm not going to have bad code lose my money. If I'm going to lose my money, it's going to be because the market sucks. And that's why like, so I started looking like here in the last month for other chains and stuff. It's like, yeah, Arbitrum's an option, but security is kind of an issue for me. Uh, Polygon is like an option, but like I'm talking to my brother last night. He had some Trump NFTs. It took him like 4 hours to sell, like get those pieces of shit onto Polygon through the bridge. I guess the bridge is a giant piece of shit. Get them onto Polygon and get them sold. You have to change a bunch of shit more than just the RPG or whatever in MetaMask, which the problem is normal people wouldn't know this shit. Like we're in crypto. We've been in crypto for over half a decade. Like I barely know this stuff. And how is a regular Joe supposed to come into crypto and use Polygon with my brother, who's actually very technical savvy? Took him 4 hours to go sell a freaking Trump NFT.
Yeah,
Like it's
dude,
ridiculous. So like that's
not
what makes
acceptable.
me like
I think that
ungodly.
I'm
It
looking
makes
for
me
that
ungodly.
opportunity that's going to break down those barriers for people. Like
I
whatever
think
that
so.
is, whether it's direct integration with a banking app or something like that. That's what I'm looking for as like a play beyond Hex.
I think the thing that's going to make Pulse Chain really get the traction is going to be UI, and it has to be easy to use. Like
100%.
if Richard makes a wallet, I hope to God he doesn't make a token for it. I'm tired of seeing more tokens, but if he makes a wallet, like I hope this stuff just works perfectly, because that's all we need is for the shit to work.
Yeah.
You know,
I
like
like what Internet Money's doing with their wallet, where, a portion, like, so here, check this out, guys. If you haven't heard, MetaMask makes $90,000 to $2 million a day just on fees, and that gets paid to the founders, I believe. Don't quote me on it, but it's not going to the wallet users. But in the case of Internet Money, that wallet is paying that. If the volumes are the same roughly of what MetaMask can pull, you'd be making that 90,000 to 2 million a day, but you'd be being paid to the people that hold the native token for the wallet. And so if Richard can create a wallet that can do exactly the same thing but better, then you got the similar element there. And if the volume comes to Pulse Chain, which it could on the function of just faster transactions and lower fees, then and you combine the perfect deck, or you got like the smooth, fast decks on a smoother, faster chain with easy bridgeability of economic energy over there, plus a wallet that pays you to hold it, plus staking across all those things, and they're all interconnected and vertically integrated. It's like a knockout punch for the crypto space. And then you're backed by the store of value in Hex, which already did a 10,000x and has
So for
real demand
me,
behind it.
I would much rather see, this is my opinion, I'm gonna get a bunch of hate for this, but like I would have rather Pulse X not had a token. I would much rather not see a token out of the wallet app or wallet
Mhm,
app.
mhm.
What I would rather see is those fees that the wallet earns. I would rather see those go buy and burn Hex. And that would essentially make, what that would do is essentially make the network effect be paying the yield.
Compounded. Yeah.
Yes, the
Yep.
network effect would be buying, burning the yield in Hex. So it would be like the biggest thing is where does the yield come from? It's inflation. Everybody wants to argue that that's a Ponzi. It's like, whatever, it's debatable for a bunch of people, but it's like, no, we're actually having network effect and usefulness of the network pay this yield actually. So that's what I would like to see is no, uh, yeah, no
I'm
wallet
gonna
token. Like if we have a wallet token, we're gonna sit here and we're gonna disperse, like we're gonna thin out buying power between one single thing. Like the more tokens, the less money to buy one thing. You know, I would rather have one thing go up thousands of X than five things go up 50X personally.
so on
And
your
then have to
on
wonder if we're in the right thing.
I will address that in a second, and I do tend to agree with you in a lot of ways. I don't think more tokens is the solution. But so this is like this is a chart from Crispy Man who runs the website hexfire.io. It's a really good resource for checking out all kinds of on-chain data for Hex and other sorts of composite data and metrics. So check
That's
that
pretty
out if you
cool. I haven't
haven't.
seen that.
I will definitely recommend that one. Okay, so this is a report that he put together that basically shows you the annual Hex supply inflation and deflation since the end of the big payday distribution phase. Okay, so the chart I wanted to show you guys on here is the market value of absolute Hex supply inflation since big payday in millions of dollars. And what I want to draw your attention to isn't not the big spikes here. I mean, I guess we could say I want to draw your attention to the right of the chart where we've been. But before I do that, let me remind you that the most inflation that ever came out of the network was during the big the run up on Hex price. So we had August 21, September 21, we hit an all-time high. That month of September, there was $368 million of inflation that came out that month at that price, at the price of the highs, right? And then over the next like 6 to 7 months, we were seeing valuations of like 68 million, 400 million, 400 million, 220 million, and by March that had fallen down to $59 million of inflation. So effectively what we've seen is, as you can see over time, the amount of dollars of inflation that has come out as price has come down to its lows was that the dollar inflation amount has now stabilized and it's sitting around anywhere from like 8 to $20 million a month. Now that's bullish for price because when you factor in what kind of volume we just did in the last 7 days, we did $95 million of volume traded on chain for Hex just on the USDC pair, and another, I want to say 30 million was traded on the ETH pair. So this $8 million of inflation can quickly get absorbed by current market demand. And
But
so what
won't that go up again, like right when the
as
price goes up?
prices rise, the number of inflation in dollars would come up. However, if you measure, and this, I'm going to pull up the other screen now. So you guys have seen this. If you measure the amount of stakes ending, you got the bow wave, right? That always ends. And so then that's like your consistent inflation that's getting sold every month.
Mhm.
This isn't tracking the inflation sold from the bow wave. This is just tracking the total amount of inflation, because obviously that number comes out less than these numbers right now. Because the amount of inflation it's not 100% of the inflation is being sold. That's not what this is saying. This is just telling you the dollar amount of how much is being created and minted.
Mhm.
So we're coming short of this 8 million or $20 million volume target. And so yes, every time the price doubles, these numbers double going forward, right?
Right.
That would be like the concern, right? But then if you look, now I'm going to pull up the future market supply chart, and I'm going to show you guys basically how the inflation's coming out over time in the future now, so that you can see how it's actually decreasing. You share screen. Second.
140 million in volume in a week. I think that's really good, you know,
Yeah. So you're going to
for
be able to
doing
get
DIXON
back to all
only.
time. My theory is that to get back to all-time highs, or just even just 30 to 40 cents, is actually not that big of a task
Mhm.
for the price. And we'll get
Right.
into that. You know, if you guys have been watching my streams for the last week or two, you know that I've been harping on liquidity and the importance
Mhm.
of it.
I feel
So,
really good about a higher low getting made here in Hex and price going up more. Even if crypto market goes down, like I think we have enough news events and everything coming to where it can stabilize.
so if I pull up basically 2 weeks from now, what's going to come out in Hex?
I'm not
So
worried at all about that God whale restake. I'm not worried about that one bit personally.
no, no,
Guy in the chat.
there's no threat from the Godwell as far as him start market selling and like affecting the
What's
price
he gonna
trend.
do? Empty
But
a $4 million liquidity pool? You know.
what he's doing is he's ratcheting up the share, and we'll get into that in a second. I just want to bring out this point first, which is this these numbers down here going into April. You're talking about 1 billion X in April 23rd. I'm sorry, in April, and then in May you're getting 740 million, 760 million. That's hex coming due. That's cumulative. That's all of the hex in the end stakes. And so these numbers used to be like 4 billion, 12 billion, 20 billion hex coming out on a monthly basis at those high prices. So you've had a complete meltdown on those numbers. And now you're seeing the amount of hex that's actually coming out on a rolling basis is getting as low as like 300 million hex. So it's
Hmm.
just a lot smaller of a number. And when you value that in dollar terms, as I was showing you on the previous report, it's just the supply coming out is decreasing over time. So it's like creating like an arc like this. Whereas
Hmm.
like, and so that the price can actually come up and meet that to make that curve not so sharply over, so that it can curve more like a 45-degree up and to the right. And as long as
Uh-huh.
demand stays stable and new entrants come in, not that it's a requirement, but that it's just going to compound the price upwardly due to a function of the low liquidity. Because what's happening in the liquidity pairs right now is there's just no coins left for sale. There's effectively a squeeze going on. This morning there was about 75 or 80 million hex in the pools. Now there's 63 million all of a sudden.
Hmm.
You know,
I would say one thing I'd make a comment about, like when we get to the end of that liquidity range and you see everybody on Twitter going, OMG, there's only 12 million hex left for sale on the market, or 20 million hex left for sale on the market. Um, the price is probably going to skyrocket because it's going to take nothing for price to move up. It's arguably like there's a debate to be had that that's actually a bearish thing, that there is no hex to be sold, because it deters people from buying the price up, because no one wants to eat that 4, 5, 10%
slippage.
slippage, you know?
Correct.
So there's
Well,
a very strong debate that it's actually bearish when you get out of the liquidity.
and it is bearish and a bearish sentiment. And what I'm trying
Mhm.
to remind people is that the bearish sentiment every day is starting to wane. And so what happens here is when you get somebody like this who puts up a big bid wall of 400 grand and the price keeps bouncing back off of it like this and keeps bouncing like this, eventually that becomes an accumulation range where sellers become weakened and dried out to the point where there's just nothing left for that range anymore. And so then the buyers naturally push it towards the edge of the liquidity wall. And what's been happening in the bear market is it would get to the edge here, and because there's no liquidity out here at 5.4 cents and onward, the price would then get sold back down into the accumulation range. So the way to look at this right now
Price
is
follows
that
liquidity.
this is all an accumulation range. And so
Mhm.
as the price has been getting moved up, liquidity has been leaving the back door and coming up to the front door. So
Mhm.
what you're effectively seeing is over time now, this block of liquidity is getting moved up. Soon it'll be here between 6 and 12 cents and then beyond, because sentiment is now changing. Yeah, in the bear market, it was a reverse of that. It was you get up to the edge of the thing and then people would sell it way back down to here, and then people would have to adjust their liquidity out backwards down to the
Mhm.
downside. But now that you have big whales supporting price and forcing price off that like a freaking trampoline and just absorbing $400,000 at a crack, you're getting people to FOMO in behind you, and then they're forced to have to buy this accumulation zone here. But if, like, let's say one new entrant comes in and buys this accumulation zone enough times, well then the price is going to start to slip because it has to, because there's just nothing left out here and sentiment's already starting to change. And so
Yep.
you're going to slowly see over the next few weeks on this chart, price is going to continue to test these levels, and then it's going to go to a new level, and then it's going to test back down, and the liquidity bands is going to get moved up and up and up.
Mm-hmm.
I want to show you guys, if I can pull up the hex liquidity on the chart to try to visualize it even better. If you haven't seen this yet, it's pretty major. Let me just pull it up fresh in case anything updated since I LP. Okay. So here you can see that same chart that I showed you before, the liquidity on the price chart, right?
Mm-hmm.
So right now the price is sitting here, which is right in the thick of the band, which is at right now price is up like 4.6 cents. So you have this large bid wall behind us supporting price, and then you have the accumulation range in front of us. But once this accumulation range has been accumulated and no more sellers are left to dump into this range, that's when you get the push a little bit higher. And every time that it gets up here, the price chart creates wicks because people will like put 100 grand in, the price will go up, and then somebody will sell it right back down because it's easy to move price out here. But the more times that you go and test this level to the upside, the more it forces these liquidity providers back here to chase to earn fees up here, right? And so
Mm-hmm.
the same thing to the downside. If the market flipped bearish now, it would be the same thing as liquidity got moved back to the downside. So I don't want to make it sound like it's all up. I'm trying to be neutral about it, but just based on the violence of this move and what I'm seeing on the chain and what I'm seeing in the liquidity pools as of late has been this liquidity has completely shifted compared to when we were back at different. And so, you know, you're playing with this key resistance line here on the hex chart. You're playing with this key downtrend resistance that's been downtrend for over 500 days. But eventually, these liquidity is going to get moved up, up, and up, and it's going to give people an opportunity to accumulate in those zones. Now, if I go
Mm-hmm.
to like a shorter time frame on here, you can see how at the top here, this was clear on like the hourly, how we kept trying to break into that low liquidity zone, and people kept selling it back down.
Yep.
Because even if it took, let's say, this was 5.4 cents the end of the wall, and somebody put in 100 grand, it wicked the price up 11% with one purchase. Small, actually, let's see, the actual volume on that hourly candle was $500,000 was traded. So $500,000 up, 500,000 back down, like no big deal. And then you had, actually, I think this is denominated. This has to be denominated in hex. I don't know. Oh yeah, it's an hourly. Duh. So over an hour of time. That's why. So yeah, you had massive volumes coming in and selling that low liquidity zone. And so we weren't quite able to break it this time. The
Mm-hmm.
more times you come up and you test that level, and the more times the price gets support at the low, the more liquidity gets pushed forward, which makes new accumulation bands upward on the price chart. I hope that kind of makes sense for everybody about how the market's being moved right now from a liquidity perspective. So even though these numbers are coming down on hex liquidity, currently they were, like I said, they were 80 million this morning. I saw this number get as low as 9 million in the pools,
Mm-hmm.
and that's when you were at this edge of this liquidity out here. And so there people were buying up the last bits of it, and then big
It
bags would come in and sell it back down.
it essentially creates a short-term top because the
Hmm.
slippage becomes such a liability that
Yep.
you exhaust the buyers because they are not going to eat that,
100%. And
um
so
like
I-
you're better off. Like, I know people that said like, hey, I got to quit buying because I'm going to run the price up too much against myself, so they just set a bunch of match orders at that point, and
yep,
they aren't
that's
running the price
exactly
up.
what I wanted to hear because that's bullish now. So that means that
Yep.
because
It's
this is keep
defending the price, though. It's defending the price.
all of these orders that are getting put in behind price is now support. And people, and the more the price goes up and taps and plays with that low liquidity zone, the more FOMO that's created, and these guys have to move their limit orders up, and these guys have to move their limit orders up, and that's what creates these structures like this bull flagging structure here, which is basically how we got out of here in 2021 when we were at the
Yep.
same prices. So I just took that same fractal out, and it basically has us moving higher over the next going into March, basically. So if we consolidate here above 3.5 cents and in the top at 5.4 cents for until, like, let's say early March, eventually the people are going to grow impatient, and then true FOMO is going to start to enter the market, and it's going to start
Mhm.
to create new highs, and then this is a self-reinforcing system where more people are interested in a rising asset, more big green candles are being printed, more liquidity is being shifted up to the upside, and it's just a momentum play, and we're just trying to push the price and the market higher.
Right. And one of the things I would say that gives me confirmation that this, like, especially in the hex chart, is not a bull trap, because like I've seen a lot of OG hexkins that love hex. They're like, it just looks like a bull trap to me. It's like, no, you guys could have said that for the last year and a half, man. But like when we did actually have bull traps, the bull traps we had in the previous year, they were done on low volume. They were done on $5 million of daily volume. We're doing like we were doing, I think we did like $30 million one of the days here in the last week. Like all these days are like minimum $15 million days. That's a big sign to me that this is not a bull trap. Is the volume actually came back, and if the
Yeah,
volume's coming back, people are not going to. So like the reason the lower highs kept getting made in the chart, lower highs and lower lows kept getting made during the bear market, is because you would buy the bull trap thinking, oh, this is the real one, this is the real one. And then once it's not the real one, you cut your losses, and then it just waterfalls the price to a new low. And you rinse and repeat that 4 or 5 times in a bear market. This is the exact opposite now, where there's going to be less and less people every single rally we have here cutting their losses. You know,
correct. Because
I
when
have,
you have less longs underwater, there's less pressure on the chart,
yes.
which makes me feel like on low liquidity, it could even make the chart go more vertical and be
Hmm.
more impressive. And so I so on February 14th, there's that really, really big, like multi-billion hex stake coming out. We think it's the Gadwhale. It could be anybody. We think it's the Gadwhale. Gadwhale never sells, typically. Never historically has he sold. But what he does when he does this, I went and I made a blog post on my website about that, and basically described how hex liquidity is getting rarer, and how the amount of hex that's coming out of the pools is going out at a quicker rate than the USDC and ETH coming in. And this chart here shows you how the ETH has been on a parabolic run up into the pools, as well as the USDC is just forming a nice solid rounded bottom on this chart of new US dollar coin
Hmm.
coming into the supply for it to be traded in and out of. While meanwhile, Hex has seen a parabolic decline in the amount of coins on there. We had like 350 million at the high back in August and October.
Hmm.
And then ever since then, we haven't been able to recover that 300 mil level. And now some big actors are pulling all of the Hex liquidity out of the system, making it rare. And this is like the De Beers moment for Hex, where the thing becomes super rare in a short time frame. And then they put the gas pedal on the price to force people to have to make a decision. Do I want to risk being left behind forever? And this is why I've been saying for months that risk is to the upside, is because there are big actors in the system that can do what they want to the price chart,
Hmm.
to make the price do many multiples on that low liquidity.
How much is the stake coming out?
Um, I wanted to say it was like 2 or 3 billion. Let's see here.
Okay. Oh, so like an ungodly amount. Okay.
It's
So
billions
so
of
to
hex.
me, just knowing that information right there, like it's pretty obvious to me that it's more likely that it's bullish that comes out, because
Correct.
one, it
So there's
this guy this guy
4.5
can't
billion coming out.
this guy
4.5
can't
billion.
sell it. So the most he could possibly do with this is put some liquidity at the 5 cent range. And what do we need at the 5 to 8 cent range? Some liquidity, you know? So maybe he does sell some through being an LP in the range that we need some liquidity for people to not move the price up against themselves. That he's when he has that big of a bag, he is married to this coin whether he likes it or not, you know? He can't just, if he wants to go empty a liquidity pool for $3 million and send the price down, he's only hurting himself. You know, he, whether he likes it or not, he is in this system now. The way I look at it, so like I see this as a more bullish thing. Like the share
100%.
rate's going to go up
Yep. So
unless he
we're gonna get
restakes.
in. We're gonna get into that. Like, so here you can see the share rate's gonna go from roughly right now it was at like 25,600. It's gonna go rocket all the way up to 26,452.
Wow.
And so it's gonna be like a 660 hex increase. If you do the math on that, if he was to do that every 45 days for the rest of the year, he would increase the share rate by himself by 6,500 hex, which would be a dollar value of $273 at 3.8 cents. Well, we know that the price is no longer 3.8 cents. Currently, it's at 4.6. So 4.6 cents times 6,500. Now you're already at 300 bucks. So every time the price doubles, his effective ratcheting of the share rate increases and compounds against the entire system too, which weakens short-term stakers' ability to mint and sell tons more interest. So he himself can effectively positively affect the price chart by compounding and ratcheting the share rate against the system itself. And so if the price were to double on a double on a double on a double on a double, he could do by himself increase the share price by $4,300 in a year if he just restaked every 45 days.
You really dig into this.
So my statement here at the end of this article, if you want to see it, go to axisalive.com/blogs or something. Let's see, what is it? Anyway, go check out the site. Is GameStop about to pull, or is Hex about to pull a GameStop? Is it about to do something like the incredible and just like gonna reach full virality on like some huge news? Now, do I think this is possible? Maybe maybe there's like a 20% chance this is possible. But the point is that these are the mechanics that goes into why the price is going to go up, because you do have good actors in the system that are doing this to the share rate to weaken the soft-handed people that just dump a ton of interest every month, or which is already, by the way, I showed you the annualized inflation chart. It's already much smaller now with these prices, like between 8 and 20 million bucks, and we're doing volume wise, we're doing what do we got here on volume? We had 94 million on the USDC pair and 40 million on the ETH pair. So that $8 to $20 million at these prices is going to get absorbed, which is more reason to believe why the price can hold on the price chart here and start bull flagging its way up to test that long downturn resistance. Like the interest isn't going to be the thing that holds the price back now. And a lot of those big shark accounts and dolphin accounts are now out of the system, so they can no longer hurt price in the same way.
Okay.
So the other thing too to keep in mind here before I forget is this here pattern that it printed on the, let's go to an hourly maybe. This pattern is called a 3 rising valleys pattern. So here you can see there's like the first rise and then a valley, and then a second rise and then a valley, and now the third rise and a valley. You guys want to know what another chart that did that same thing in the last year? Hedron. Hedron did it. If I go to a daily and I show you what I'm seeing here, what do you see? I think it's in the hourly chart maybe. 2-hour chart, 4-hour chart. Let's see. Okay, so if I go to the 4-hour chart, look what Hedron did. It did its first rising valley. By the way, Hedron did a 3,000% return off that low. Valley number 1, valley number 2, valley number 3, and then it rocketed off to a high before selling down. And people thought that was the end of the move. Well, from that breakout point to the high was 270%. Hex right now, how much did it do off the breakout point? It wicked high with about 119%. So if it does similar move to what Hedron did, it's not quite done, right? We're only in the third valley. So there's room to think there's upside. Now, on top of that, Hedron wasn't done there. Hedron price then retraced 60% in 5 days and then continued to a new all-time high of, or not, it wasn't an all-time high, but off that level, it went another 300% in 15 days. So this whole setup here is setting up for a much bigger move. You can expect that there might be a pullback on the break of that mega downtrend resistance on the, like, here's the 3-day chart. When we come play with this resistance line here, yeah, there's going to be some sellers at that level because of how many people got wrecked here before. But a lot of those people, if you look at this on a linear, they're out. And you know why they're out is because of all of the pain that they experienced down here. A lot of them just capitulated out. So there really is just a lot of air up here, you really think about it. And so I think what we're targeting is more of this zone here, which is the 618, which is basically that 14 to 16 cent range, which is where we kind of broke down from here when the
I've
PulseChain
told people I know, like, I really don't know where the price could go, like going into testnet and going into the snapshot. But like, the thing is, like, 8 cents wouldn't surprise me, but also 35 cents wouldn't surprise me, because I don't know how euphoric people will get. You know, people really, really want to not be sitting on
Well,
USDC.
those big whales have
Going,
got their boot on the back of everybody's neck right now, saying like, "Don't miss your chance." Like they're basically forcing people to make a decision right now, and it's like one of those things where it's a timed event. Like this run isn't
yeah,
going to go, isn't going to
you
stall
were
out and
waiting for
stop.
price to go lower because people finally, after a year and a half, got
Yes,
bearish. And there is a lot of people not in the market right now. A massive amount of people not in the market.
they're all
Mm,
setting limit orders down in these ranges.
yep.
They're hoping
And
that the price comes back down, which that's more confirmation that this bottom is in.
oftentimes, crypto does not give you a second chance, is one thing
Oh,
that you need
especially
to
off
consider.
all-time lows or
Yeah.
local lows. I mean, the
Mhm,
bottom lows. Those you can see that on the ETH chart too.
mhm. I know people want to sit here and shout decorrelated and all this stuff all the time, but like it looks to me like the ETH pullback is probably coming now. I mean, just off of how things look. But I would like to see how Hex holds up if ETH does do its main big
I
pullback.
do
You know,
too. That's
if
going to
ETH
be
goes all
very
the way back to
telling.
1250, I would like to see Hex like stay above 4 cents. And if it did, like that's like rock solid confirmation to me that we're going to go up and
DIXON
pullback.
is literally giving you guys like major alpha of data you want to look out for, which is like if so look here. This was the bottom on ETH. You had one chance here, but you only had 2 days to catch that bottom. You had a day to
Crypto
catch
does
that
not
bottom.
give you second chances.
Yeah, it really doesn't. I mean, figure if you went on a vacation for this weekend, you missed this whole thing and you're already back up to
Mhm.
150
Like
bucks from the
you
low
got
of
to think
80.
like the normal person, especially when we're using dexes and matcha is not the greatest thing in the world. Like it works, but it's not the greatest thing. And you like being an LP to get your tokens bought, you kind of need to be there and ready for it. Like it's not the easiest thing to just set limit orders and really get them filled in things on dexes like this, you know. So yeah,
It really forces people to be more engaged with the chart and engaged in it, which gets more eyes on it, which gets more social engagement, which gets more awareness, and it's just a self-compounding loop. This whole system is very beautifully designed and kind of scary if you think about it. And
I will say what I told and what I'm telling my actual real life friends is I don't think we're going under 3 cents again. I think the chances of under 3 cents is slim. And I think there's a chance we don't go under 4 cents again. You know, I don't know what the percentage is on that, but I think there's a chance we don't go under 4 cents. And I said, I don't, it's really hard to like pick a spot to buy. Like, how it's so volatile right now. We're going up and down 10% a day. Like there's really no right time to buy, you know, because you don't know where the bottom's going to come in at on these pullbacks. That I'm just telling them like, this is me telling my friends, not all you people in the chat financial advice, but like I'm telling my friends like, hey, like this is probably the bottom in Hex. Like the most downside I see for you is 50%, you know? And that's for crypto. When the downside's only 50% and the upside is exponential, that's a pretty good buying opportunity.
yep. And so another chart to your comment about how volatile it's getting. This is another chart that I actually had Crispy Man make specifically for me because I wanted to be able to see the historical volatility of the hex chart from the beginning till now on a different time frame. So this is like a roughly a monthly time frame.
Mm-hmm.
You can see that back here when price traded between on the yellow line here, the price traded between 3 cents and 3.2 cents for a month straight. We hit all-time lows on volatility, if you remember that time frame, and it was then followed up by a 2 cent price raise by a $4 million injection of liquidity from the God whale himself. And basically what this was, if you've been listening to my streams for the last few days, you've heard this now a couple times over, but basically what this was it was an liquidity injection to put interest back into market and to entice the last bits of sellers to dump and capitulate price at the local lows, the
Mm-hmm.
bottom. So you can see here on the volatility that it bottomed at levels never before seen on this chart anywhere. Look at the blue line. It never goes down past this 1.0 line. But this was the
Mm-hmm.
one event where it did make a low, and then Godwell spiked up the volatility with his injection, and then the sellers came back in behind him and made it even more volatile. Ripsawed it back down to the downside, and then you created at the very bottom a higher low on volatility. So this was essentially him setting the bottom by doing that after all time lows in volatility to keep interest
Mm-hmm.
in the chart and to get those guys to capitulate. And so now you can see we're back up into super volatile ranges. And now that we have all this momentum and eyes on us, like the chart's not going to just stop here, in my opinion. It's going to get only more volatile and more sketchy for those guys that did not get any exposure. It's not going to get easier to DCA in. This is where you're going to be worrying like, well, if I buy now, you know, I might miss 3 cents, but I might also not get to buy till 9 cents. I don't know what to do. I'm
Yep.
scared. And that's basically that fear is what's going to drive this market price higher. And so when I
Mhm.
look at this chart on on a weekly, the way I see this playing out is something like this reminds me of back here. This was a 95%, and this was like a 98% drop in price from the start price to the very bottom. And now what you have here is the second time ever that we went down into the 90% ranges. And so I'm thinking that, your rocket move out of here is going to be similar in fashion. So you're
Mhm.
down 96%. Here you were down 98%, 98.5%. So our coming out of here could be just as violent, if not more violent, than that move was. And so if you look in this chart here, you can see that this candle that got printed here in the last week, that's the biggest candle we've had since all the way back at the PulseX sacrifice phase.
Mhm.
Before that, I mean, you got to look back to here before when we made our breakout from 2.5 cents to 6 cents. And
Mhm.
that's why this price action here is so important to me right now, because this is a type of move I think that we're in. It's just a slow.
Oftentimes, crypto, even though, like if we're in a long-term bull market or something, like oftentimes it'll still have cycles inside the cycle where we'll have 90 really good days and then hex will cool off. So like you're looking at the hex USDC chart, aren't you?
Correct. Yep.
Okay, well,
No, this is a
like,
hex so it's actually a composite. It's USD, but yeah.
okay, if you actually look at like the hex Ethereum chart,
Hmm.
there was actually a really, like it actually for about 3 to 4 months did very poorly in the middle of the bull market. Like we had a pullback similar to this, see? And yeah, exactly. And the USD chart really saves you. Like when you turn log on the USD chart, it really saves you from realizing that during that downtrend in the hex versus ETH chart, the USD price was still up, so like it didn't look that bad. But the entire crypto market for a few months was running away, and hex wasn't going anywhere.
Hmm.
And that's just because in crypto with market psychology and stuff, people generally like we get these little 90-day to like anywhere from 60 to 120-day cycles where we'll go up for 3 green monthly candles, and that third one is always the biggest blow off one. And then we cool off for a few months, and then we do it again. And that's what I could see happening right here where we're at the moment, like getting a big blow off candle in the third month.
Yeah, I mean, like you mean like ripping to 20 cents and then coming back down to test 10 as support, or like 5 as support,
10,
something like
8,
that.
something. Yeah. I
Yeah.
mean, I could easily see that happening.
Yeah, and I think you could be onto something there. And I think that this also strengthens the argument that Hex does decorrelate from the rest of the market from time to time. And this would be one of those instances where the rest of the market was leaving Hex behind, but then
Hmm.
Hex totally overperformed as a laggard play,
Yep.
right? And it did 4,000% against ETH, right? So
Hmm.
and so I've shown this chart a lot too the last few days, which is the correlations matrix against Hex, Bitcoin, and Ethereum. So you can see in the last, if you don't know how to read this chart, it's basically like Bitcoin ETH hex versus Bitcoin ETH hex. So Bitcoin against Bitcoin, obviously they're the same asset. They're going to do the same thing as each other, right? But
Hmm.
then you go down to ETH versus Bitcoin. 90% of the time in the last year, ETH was doing the same thing as Bitcoin, whereas Hex was only doing it 55% of the time. So
Yep.
it's a strong correlation, but not like the most strong type of a correlation.
It can be correlated at times and it can be decorrelated at times. And
Correct.
like, it kind of beats my brain and people that just are like, it's decorrelated. It's always decorrelated. Like there is
Right.
times where it is, yes.
Yeah,
And a lot like
people say that that general blanket statement of, "Oh, it's decorrelated or it's not decorrelated," and they call each other idiots. But really, the
yeah,
idiot is not knowing that this is based on a rolling time frame. So if I go to
right.
the 30-day, now look at what it says. In
Yep.
the last 30 days, X is doing the same as Bitcoin only 10% of the time, not
Hmm.
55% of the time. Okay, and then against ETH 17% of the time. But if you want me to blow your fucking mind, what's it doing on the 7-day? It's
Hmm.
negatively correlated from Bitcoin in the last 7 days, and it's got an insignificant neutral correlation to Ethereum in the last 7 days. So right
Mhm.
now, Hex is decorrelated from the market over a 7-day time frame, okay? And so it's frustrating that people don't want to like listen and just actually look into the data. But what the
Mhm.
data is saying right now is that Hex is doing something different than the rest of the market. It's setting up for something different, whether that means the rest of crypto is leaving Hex behind or Hex is leaving the rest of crypto behind. It beats to its own drum from time to time, and that is one of the biggest strengths with Hex.
And the thing is, like, it's not always Hex, but I mean, a lot of it's news and event driven. There's other altcoins that do decorrelate because there's an event like Hedron decorrelated during the bear market because it
Mhm.
had an event coming up. It had an auction where people wanted a bunch of Hedron to buy Hex. So the price goes up 20x and it's decorrelated. Well, it starts decorrelating again when the event happens and we go back down. There like it's very event dependent, you know?
Yes, that's a very good point that you brought up. Thank you for that. Because yes, there's other things, and funny enough, they're all tied to hex that can decorrelate. And so they're unique in that way. So what I have here is just basically a fractal that draws out, and if we're being conservative, this is kind of what I see as a potential outcome for hex. Like if the price support holds that 3.5 cent level, remember now, right here where liquidity drops off a cliff is at 3.25 cents, and here it's at 3.6 cents. So between that 3.25 and 3.6 cents level, people are going to be just as scared to sell down and eat slippage as they are to buy up and eat slippage. So that works in both directions, guys.
Mhm.
But right now, you have a whale we're helping you guys stay up and push prices higher. So keep that in mind. Now, where's my chart at? Basically, there's two ways this can play out. Either it's a slow grind, or or we get really a rapid move to the upside that leaves everybody behind. And I'll leave it for you to decide which one you think it's going to be. But
I personally think the rapid move is more likely than the downside move, and
I
that's
do
why, like,
too.
I'm personally telling my friends, it's like, and that I've made this tweet on Twitter. I made this all the way back in March, even like last March. I was like, it's way more painful watching the market run away from you with you not in it
Much,
than
much more
watching it
painful
actually
than
happen.
watching millions turn into a few
Yes,
hundred grand. Much more
like
painful.
the
Yes.
downside I see for Hex at this point is 50% max downside. Personally, like I don't think we're going under 2 cents again. I personally don't think so. So
I'm in the same
uh,
boat.
yeah, maximum
This is
downside,
showing you support
upside
at
potential.
3.2, like literally this fractal is showing you support here at 3.2 cents.
Hmm.
Literally. So that's right where your liquidity wall drops off a cliff. Who's going to sell down into that? Nobody. I'm sorry. Then people aren't that. The guys that have bags still are not that dumb. They'd
Hmm.
rather just slowly let the price chop higher and sell in segments. But
Right.
here's the thing: is enough guys do that, they're getting left behind by the week, and then eventually you do get that burst of liquidity. One of the big players just comes in and does it again, just like they did it back here, just like they did it back here, just like they did it during big payday and the double top with the 2 cent top. Then you consolidated. This is the type of move I'm seeing in Hex because the goal is a buck 25. That's where we're going. If we got a trade between the all-time high and 20 cents for the rest of the year after we get out of here rapidly, that's totally okay. That's the way I see this happening is like we're going to do our own thing. We're going to decorrelate. Then we're going to trade sideways, let people get whole again by selling down the price from 50 cents down to 20 cents for months and months and months. And then
Hmm.
going into 2024, we'll start to build structure to go higher for the real bull market. Like this is just an intermediary play. Hex always moves in twos. You got this major move and then a sideways action. You got this major move and the bear market. Well, why would that not hold true again? Major move, sideways action, major leg number two in the real bull market.
Yep. I think that looks pretty realistic. Really. I mean, either one of those. It's to me, it's an educated guess, but like they both look realistic to me.
Either one of these to me looks good. This means that the bottom's in, and I think that if you don't think that by now, if you're listening to somebody that doesn't think that by now, recheck your sources because this is not a normal. This is not the things as they were back here in the in the
Right.
in the dumb days.
Like when I was pretty certain the bottom was in around November 20th, like I was saying, like I think the ETH bottom is in, but Hex, I was always concerned just because there was several $100 million plus or hex wallets that had a history of selling, and it would have been actually detrimental if somebody came in, if Godwell came in or some big buyer came in and ran us up to 20 cents or something. It would have been detrimental to not have these people out of the system at that point, because they could ruin our entire momentum. And the fact that they sold out there right around New Year's, and then I think one more guy emptied out somewhere around like January 10th or so, like that to me was the confirmation that like the dude market sold basically 150 million hex over the course of like 1 hour, and we did not go under 1.8 cents.
Yep.
Like that to me is confirmation that we aren't going under 1.8 cents again.
Yeah, so what DIXON's talking about is this part right here where this dude like market dumped 150 million
Everything. Yeah.
right here. It was $8.8 million, I think. Is that what, if I'm not mistaken? That's
where I
crazy.
got long-term bullish on hex.
That's where that was the capitulation candle that everybody was looking for. And the fact that the price recovered immediately and then started to build structure, and by the way, a really good structure. And now you got the 3 rising valleys. It's just such a clean setup on such a nice little spring move here. This was a clear wick off distribution, or on the lows. I've shown that too. So let me see here. We look good against Hex, or against ETH. We're looking good against Bitcoin. Here's the Bitcoin cross. We didn't show that yet. We've broken out. We're breaking out again. So on a weak ETH and a weak Bitcoin, Hex is still holding its levels and actually looking quite well right now. It's holding inside of the structure quite well. And so what was it going to show? Oh yeah, the wick off distribution. I might have that still somewhere.
I think the daily chart looks really good for Hex too. Like the daily chart looks better in Hex than like Bitcoin. Bitcoin's daily chart looks like dog shit. ETH at least had like a little ascending channel going, and I mean, it fell out of it. Which one are you looking at?
I got the daily up right now.
Yeah, I think that looks awesome. Like it looks way better than Bitcoin did. Like ETH did look good, but like it's just not at the moment.
So Hex is still clean to like chop, and then meet the 21-day daily bull market support band, find support here, and then rocket off it to come test this major level. And that would still put you out past the Godwell stake somewhere on the 19th or 20th. I just tend to think that, you know, Godwell might be happy to do another one of these pretty soon.
Yeah, I think we could go all the way back to 3.5 cents, and I think we'll be okay still, personally.
Yeah, totally. And then the liquidity pool is reinforcing your point, because 3.5 has you right here where it drops off.
Yep.
So, and then, you know, who's going to sell down on much slippage, you know, because this is that neutral market. Remember, we looked at Bitcoin longs to shorts earlier. The market can't decide right now what's what. It's 50-50 split longs to shorts. So nobody really knows what way the market's going to go. And so everyone's kind of trying to take their bets right now. And so if that's the case, then you're looking at Hex. What chart did I have up? This one. You know, it's a neutral market. Well, yeah, you know, you come down, you test these lower bands of this liquidity. You know, if it's neutral sentiment, you know, people aren't going to take the risk to sell down and maybe not get lower prices unless they just want out. But as we've seen in the last few hours, you know, people are being absorbed at the tune of $300,000 to $400,000 a crack. So keep that in mind. So, well, if that's good with you, man, I think we could probably wrap it up. Bye DZ01, man. Motley Investor, what's up, man? Everybody in the chat, thanks for being here.
Hi, Molly.
See you guys.
Cool.
See, the moment D01 sold out and we didn't barely break 2 cents was confirmation of the bottom. Agreed. Bye. Yep. All right. Well, DIXON, thank you so much for joining me and dealing with all my analysis. I've definitely been looking into this stuff, trying to provide value for everybody, both on Twitter, YouTube, and now through my new website. So if you haven't checked that out, please do.
Yep, I'm glad someone's streaming, because I don't do it as much anymore. So,
but I'd love to have you back on a regular basis, because like I love streaming with you. I think we got good chemistry, and like you have so much knowledge of the regular economy that can help reinforce our views on cryptocurrency.
Cool.
All right, guys.
Sounds good.
We'll talk to you later. Peace.
Bye.